Good everyone, Les here, Chief Analyst of BG Trading in Australia, and I hope you are well. Today is 21st of August 2024, and I'm going to be talking about iron ore stocks, whether it is time to start looking into those oversold stocks. Let's understand the key macroeconomic metrics that has been affecting negatively iron ore prices, and when do we expect for money to start going back into stocks like BHP, Rio, Fortescue, Mineral Resources, and other iron ore companies. Provided that those companies are still producing in large amounts, but the realized price of iron ore is being relatively lower. Obviously, this decline tends to affect the earnings negatively, and potentially the companies have its dividends reduced, which most likely we have been seeing and we're going to be seeing in this financial year. Nevertheless, money flows into those stocks again, adjust into the right time of the macroeconomic cycle. That's what we're going to just explore in this video. How far are we from this turnaround? Let's have a look. Remember, this is not a financial advice, just as from BG Trading, sharing with you how we apply BGS20 strategy together with our VP members to chase 20 to 40% profit in small, mid-size, and sometimes large caps, and how we set up targets, stop losses, how we avoid buying stocks at the FOMO area, and much more. So all in this channel. So if you like, please subscribe and share this video with someone that you believe would be interested. Hit the like button right now. That will help us big time. Also like to invite you to become a member of our free Facebook community. We call that buy, grow, and sell strategy for share traders. We post a lot of great quality content, including access to stock analysis, some market update about companies that are releasing reports in the upcoming weeks, some feedbacks about commodities, market sentiment, and great quality conversation with our members. We currently have 5,200 members. So really, this community really has been growing well. Now let's jump straight into iron ore. Let's understand what's happening with the commodity itself, because so if iron ore prices decline, then the iron ore stocks will decline as well. And as you can see here, it's clearly this chart clearly shows us what's happening with iron ore prices. As you can see, there's a strong support line around, let's say, $95 to $100, and every time over the last, obviously since 2022, iron ore price reach those levels and bounce, and then reach those levels, will be above here, bounce, and then bounce again. So obviously it shows that the market tends to adjust itself in order to hold iron ore prices above those levels, therefore make feasible for companies to continue producing iron ore. There will be an increase of iron ore supply in the market over the upcoming years, but we are looking here at BG Trading is trading. So we really focus into what's going to happen within the next 6 months, pretty much. And that is why I like iron ore prices now down, offering an opportunity to buy some of the leading iron ore companies at technically discounted price, where you normally would be looking at buying small caps, more speculative iron ore stocks to make pretty much the same trade swing that you can do now with a company like FMG, like Fortescue Group. And that's very, very exciting from the trading perspective, because you not only have a relatively low risk as those stocks are already trading at a considerably discounted price, but also you don't have to have exposure into very speculative stocks that you don't even know whether they might shut down production or something like this. Now, let's understand the macroeconomic metrics that affect iron ore price. The first thing, and I actually had put an article together, and I'm gonna read for you here. So if you're interested, just shoot me a email, and then I'll send the article for you. So essentially, the correlation in between iron ore price and interest rate cuts, which is the current narrative in the market. So all the markets focus into interest rate cuts, right? In the very, very short term, is a negative, tends to be negative according to historic data, because as interest rates prior interest rate cut, the economy is shrinking, and that is still a result of high inflation, which, by the way, iron ore has done incredibly well in high inflation. But when a low inflation comes, and then as a result of a monetary tightening, which just has been happening over the last 2 years, then we have this fall as a result of weakening economy, which is exactly what central banks want to do, what Fed wants to do, weakening the economy so people stop spending and prices start coming down. But then if they weaken too much, there will be fears of recession or hard landing, so they call. And that's when iron ore prices crashes, and exactly what's happening at the moment. That's as a result of fears of a low economic activity. So iron ore is really tied to China. So essentially, there's oversupply of iron ore at the moment, low demand, and not much going on into the construction in terms of growth. As soon as this scenario flips, and once the market senses that Chinese economy is picking up again, and U.S. interest rate cuts start having effect into the economy and start heating up again, then that's when iron ore prices bounce. The problem is, when that happens, when we receive that data, that will be too late, because most iron ore stocks and even the price should already heading up. And the real money is when we are able to detect the weakest period possible, and then take a position when things are really weak, which I would say right now before interest rate cuts, because once we have interest rate cuts, that will slowly warming up world economy. And also, I want to highlight this: China has cut interest rates recently as well, and potentially will cut it again, and that will have sooner or later positive effect, and we'll see that as the economic cycle goes. We will be shifting from one stage to another stage of the economic cycle, which will be economy heating up again in China, in US, and many other countries around the world. The tricky is inflation. But if interest rate cut generate inflation again, that's also positive for iron ore prices. So keep in mind now, the whole idea is buying high quality iron ore producers at technically discounted price prior interest rate cut. At the moment, we've been having a lot of great results with companies like with tech and growth stocks. So if you can see here, Appen has reached our BGS 20 target, 75% profit. That's also together with our VP members. So Zip has reached our BGS 20 target yesterday at $2.20. And so a lot of money has been made on those sectors. I still think there's more money to be made, but we should be looking at where is the value going at the moment. And I think iron ore price. We are having value now. Are we at the bottom? We don't know. Very hard to take bottoms and tops, but one thing for sure, we may be, and this is not a financial advice, but I think we should be looking at taking position. In fact, we have been taking some position in some of iron ore companies, and we potentially be increasing as well together with our VIP members in the upcoming weeks. We're waiting for maybe another correction on overall stock market, and that would be great if that happens. We should not freak out. We should actually take that as an opportunity to take position into value stocks, and I think there's value in iron ore for the reason I've just explained. But as soon as they start cutting, we have the opposite effect. And remember, the market will price within 6 to 18 months. So we'll be looking at what's going to be happening. What we should be looking now is what is the macroeconomic environment or outlook looks within 12 months from now, after Fed cut rates. That's what we got to ask yourself, and then taking position as now. Anyway, so let's jump to the first stock, which is Fortescue. As you can see here, Fortescue Group has the stock has fallen about 41%. 41% down from recent highs in February. Obviously, there are some reduced dividends as well, but it's still the fourth biggest iron ore company in the world. And they keep registering record production across the board. So it's sensible to look into these type of stocks and see where are the so-called resistance levels and be buying around the resistance levels. So we could see, ideally, we could see FMG hitting $14.50, between $15, which is the next hypothetical support level. However, I would say this, around $17, it seems to be a great value already. With strong upside we have at the current levels, Fortescue. If Fortescue only goes back to the long-term moving average, which is sooner or later it's going to happen, there is a 36% upside. So that shows how Fortescue is trading a technically discounted price. So really good opportunity here, in my opinion. But you have to have a little bit of patience and wait. Wait for those interest rates take effect in the economy, and we don't know exactly when those stocks will start bouncing, but you will see money flowing from sectors that have gone up quite considerably, like tech stocks, into stocks that has a considerable value now because they're trading at really low levels, like Fortescue. Now the next one we want to say is BHP. So BHP also trading at a technically discounted price, not only for the short term, but for the long term. So we could see still a period which BHP will trade together with the other iron ore stocks sideways or even in decline. But once we have a solid breakout of the downtrend, which we haven't had yet, then that's when we could see potential bounce. And And look, if you look at BHP, as per the chart formation here, we have a downtrend, which is currently sitting just under $41.41. So we want to see the share price breaking this downtrend in order to change, to reverse. It hasn't happened yet, and we don't know when that's going to happen. But one thing we know, BHP is currently trading a technically discounted price, offering relative value to its historic share price movement. Now, the next one, and the same story, is Rio Tinto. It's another big iron ore producer, third biggest iron ore producer after Vale from Brazil, offering also a very good upside at the current levels. Interesting enough, I want you to just check, there is another support level around $100. So Rio could fall another 10%. So just if you're going to be buying this, buying blocks, don't buy one-off position, buying blocks would start adding up as it goes down, and then the ultimate, the big averaging up would be when it breaks down the short-term downtrend, which is right here. Potential maybe a double bottom formation or something like this. So it's very interesting. So you gotta be looking at when it's gonna be broken, this downtrend line, and then buying around that level in order to average up, provided that you bought under that particular level. That's what we would do anyway. Again, this is not a financial advice. You gotta understand that you need to research about this company. Okay, so now back to iron ore prices. One thing I wanted to talk about is the investor sentiment and the currency impact. So interest rate cut can also affect currency value. It's common knowledge that it does devaluate if we have an interest rate cut. So essentially, dollar will start losing ground. And that happens particularly in countries that are major exporters of iron ore, just like in Australia. Okay, but the flip side here is that we probably will see US cutting rates far before Australia starts cutting rates. Okay, so at the lower interest rates, that means weak currency, making export cheaper and more competitive in the global market. However, if Australia delays to cut rates, that will be less competitive, and that is another negative fact that has been contributing for iron ore stocks to move down. But if you look into, like, for example, Vale is also down. So look, it is across the board. I wouldn't be trading iron ore stock right now. We're just holding and start adding a position slowly. So it most likely will be rewarded once interest rates cut are effectively realized, and the market will start pricing economic growth again, and potentially inflation coming up again. And that's when we should see iron ore prices moving up once again. Let's take a look at Grange Resources, which is another stock, another iron ore stock. So we had stop loss in our last trade around 37 cents. That was good. That's why we have a strategy, because now it's trading at 29 cents. So it's got to make sure, always take stop loss in order to protect capital. Now, this is another stock. If they cut the dividends, this company will keep going down in terms of share price. However, if the dividend is a reinstated, so okay, like say the final dividend, then we could see a bounce. This company is still paying dividends, but it hasn't paid for the full year since last financial year. So that's why the share price is still going down. But in certain level will hold because the yield will be quite substantially. And across those companies already have really high yield at the moment. Obviously, we don't know what the yield moving forwards because we only based our analysis into past dividends. Now, upcoming dividends will be lower, then reduces the yields of the company as well. So the other one is mineral resources, which is lithium and iron ore. The lithium compound is pretty low compared to iron ore. So this is pretty much now taking a toll as a result of low iron ore prices. So trading at 45 cents. Again, we need to see a reversal. We can't analyze stock by stock now because they're all moving together. The money, it's not in this sector at the moment. It's trading actually at one of the support lines here. That's why most iron ore stocks has bounced today anyway. So keep in mind, all those stocks are in buying area at the moment. But buying in blocks, wouldn't be buying a big position right now. Just buy in blocks and keep buying all the high quality ones. Don't go for speculative, because when the market is weakened like this, they tend to fall further. Okay. Anyway, historically, it shows that every time iron ore price goes down, it goes up again, and so are the stocks, the high quality companies like this. Guys, hope this was valuable. If you have any questions, post your questions at the box below. I'm actually doing this video because one of our comments that we received in our YouTube channel has asked us to take a look on a iron ore stock. So here we are, iron ore stocks, iron ore, and interest rates cut, macroeconomics. Wait a little bit, patience, and sooner or later money will come back into iron ore sectors, most certainly. Thank you for watching. I'll see you in the next video. Bye.